Smart Money's doing. It's a new show, but we do have access to the order flow options from institutions and whales. And so we take a look at that on the show. And so, yeah, my name is Caleb. I'm pleased to introduce Gamma Delta Theta, which is my LLM, and is reminding us today, a large language model, and is reminding us today that um, I have to chew gum. I apologize, guys. It's going to be a good show. Stick around. Uh, but he's the this DD GDT is reminding us that you can't predict or model markets because they're not made of rational actors, and people are emotional, and that's what markets are. They're just like a ball of emotion. And you can see that reflected in the sentiment and in the order flow every single day, where you start and like people will be bullish and then they'll get bearish. And anyway, it's interesting. But that's why we have stops in the market. That's why Bitcoin is so crazy. Anyway, let's get into it. I have an agenda for us. We're going to talk about the earnings action, especially on Tesla and a little bit Netflix, whatever, Zion. If you were into Zion, if you watched my show, you might have made a couple. Big tech action on the QQQs and what's going on with this refactor and what's going on with big tech. And is now the time to put them in their place, to buy some puts on big tech. And then we're going to talk, like I said, sentiment and order flow, which is kind of like we're going to look at the options order flow. So there's billions of dollars being spent in the options market every day, and we have access to be able to see what they're buying in real time. And so to me, that's like better than any market signal could ever be. It's real time information on what's actually happening. It's the ground truth. So we look into that and see what people are doing. And then we'll have next week's speculation. Basically, what do I think is going to happen? And then stick around and I'll tell you about my idea called the options double down. And I don't know, like give me feedback, right? But I'll tell you about it if you stick around. And so let's go into, well, first of all, could we appreciate GDT? I just said, like, tell me something. Anyway, you could read it. So Tesla was crazy. You know, if you've been following Tesla, you know they're going down on earnings, but you kind of want the no cap pop, and so you pay for that. So I don't know. I got burned on earnings. I'm just going to keep getting burned on Tesla. I'm going to I think we're getting close to whatever the true bottom is, because whatever the next price escape is, that I think is the last one. It might have been 90. That might have been it, but we'll find out, right? It'll be interesting to find out. And so on who else? Netflix is like a good example of why you want to sell calls right before earnings. It all just depends. And so if the inverse had happened, like this is what's so interesting about earnings action, and why maybe you can do nothing, or you can like make a bet and then just accept that you're going to be wrong and like, you know, take a little pain and then like reconstruct your long-term, you know, position or whatever. And so big tech, yeah, I think there's something happening like I talked about last time with the QQQs and a feedback loop of big tech. And I do think that they are the safety play. So like in crypto land, when anyone gets nervous, they're going to sell into something safer. I think that's probably just USDC or maybe Bitcoin, but I would just do USDC, which is like such a great asset. USDC is a stable coin backed by Coinbase and Circle, which they should IPO. Come on. And it's like a tremendously valuable asset because it's pegged to the US dollar 1 to 1. and it's so stable. And then like it has the crypto kind of like rules applied to it, so it comes with its own limits and special qualities, like any other financial instrument that we've been developing over the last couple of decades, but really last couple of years. And so, yeah, we'll talk about all that bullshit, and then we'll talk about like speculation on what's going to happen next week, and my idea for the options double down, which I think is like a very terrible idea, anyone would say. But if it did work, it would be. I feel like if it, sorry about this gum, but it's got to be this way just right now. Uh, I feel like if the options double down did work, I'll just give you the basic setup, and then we'll keep going through the show. But I think that's like a good, this is my teaser. Um, the options double down, there's a way to always create a little ounce of liquidity by just selling a call against your options equity. And I think, yeah, it's risky, it's dangerous, but it's not that crazy, especially if you just like keep backing into extrinsic value through both moneyness and time. And then like, well, yeah, it's going to go down a lot but so would holding the stock. Like if the stock declines 50%, you get cut in half. So that's what we'll talk about. And option double down. Oh yeah, and how you can create a little bit of liquidity, which I think like 10x is your return because of how option prices are so volatile. So like imagine if when you think you're at like the real, I'm just telling you the idea because it's so exciting. I don't know, maybe it's not exciting. Maybe it's a great way to blow up. It would blow up if you lost half the value, but that's what's so good about this other part. Basically, you just do a spread trade, okay? That's what it's called, I think, is a spread trade. And it would be like a debit spread trade where you buy calls on one side and sell calls at the other side, which kind of like finances and then offsets your risk. That's, I think, how somebody would describe it technically. How I think of it, the options double down is because of the volatility in option prices. It's a advantage. It's a huge advantage because you're getting like this price improvement for free, and you can lock in these returns however much you want, however risky you want. If you want to take more risk, then say less time and closer to the price it's trading at. If you want to take less risk, go further in time and deeper into beneath the stock price, at least with calls. And so like, let's say you want to take a position in Tesla, which just had a 10% decline and is continuing to decline. And so it's largely being de-risked for the next, like cycle, whatever that is. Maybe a year, maybe less, maybe 3 months, I don't know, maybe a quarter. But either way, all the information about Tesla is now packed into the price. Relatively, plus or minus 10% probably. And so now might be a good time to buy into Tesla. But let's say you just want to test the waters out. You don't want to use a ton of money. It's $160 a share. What you can do is you can just basically take a debt. Instead of taking, it's $260 a share. Instead of taking that $260 and buying a share, you buy an option. And then when that option inevitably falls in value by half, you simultaneously sell it and open another option that has more extrinsic value in both equity and time. Equity meaning how much of the premium is like in the stock price. So like if you're buying like almost at the bottom, like at the bottom of the option chain is going to be like, that's the most equity, and that's going to be reflected in the premium, exactly 1 to 1 actually. And so you're just basically paying for equity at some point. And but if you're like, you can get wiped out real easy if you flirt with that line too much. And so, but yeah, that's the idea of the double down. So you buy, like, back to the scenario where you're like, okay, they've been a little de-risked, let me just take a bite. So I'll take a $250 bite, and then you're gonna lose 75% of it instantly. But it's Tesla, come on, fucking let's go. And so then what you do is you sell that and you take whatever's, you need to do that. Like 50% really is like kind of your cutoff, I'd say. And then depending on if you're like at the bottom or whatever, this is the double down. You sell that, take that, and just make sure it has more extrinsic value. And then you just go deeper and deeper into extrinsic value. And eventually you're going to get like this huge outsized price improvement, assuming that Tesla doesn't go bankrupt, which they could well go bankrupt. So there's real risk here in doing these kind of things. You can lose it all instantly, no doubt. Or you could just make a mistake and flub it or whatever. Lots of ways it can all go wrong. But like, it's just, in practice, or in theory, I'm just saying this all in theory, if you did that, you could get a ball of equity, let's say, or a ball of extrinsic value is said better, and it would represent both time value and price value. So the deeper in the money and the further out in time, the higher the extrinsic value of a given contract, of an option. And that just makes sense, right? In the future, everything's unknown. Like, what does an option give you? It gives you an option, and it gives you something that you wouldn't otherwise have. And so if you want to just have that, it's like a wish or whatever, not a wish, but like, it's like an ephemeral thing. And so like, if you wanted to just have that for like 1 second, well, that's going to cost a lot less than if you want it for 2 years. Like if you want to hold on to an option for 2 years, that's going to cost a lot more money than like 2 days. And that's all reflected in the price of things. And that's kind of like what sets the premium, which I think is a terrible word, and we should come up with a better word to describe the value of an options contract, what you have to pay for the contract. But anyway, the whole point of the double down isn't that you double down. That's not what's special. What's interesting and what makes sense is that you can always pair a sold call to a purchased call. So let's say you have this ball of equity, like I was saying, you have this ball of extrinsic value. What you can basically do, and that's really risky, right? Especially like, let's say you wanted to get into NVIDIA right now. Well, that's crazy. But what you can do is you could just short sell that ball of equity and you can basically just do an arbitrage between time. And so you can be long and short at the same time. It's crazy. And so just think of this, like you're doing this options double down. As the price of Tesla falls, you're selling your contract at like 30%, whatever, and buying a new one whenever you think it's bottomed. You could be wrong 5 times in a row, but you're just adding extrinsic value every time. So, and moneyness every time. You should be adding both. And as you get deeper down into that, like diagonal down and to the right of it depends on how you're like have it all set up. But like as you get deeper into the money and further out in time, you're going to be adding extrinsic value to the contract, which is going to dampen the effects of the stock price change and make things move like less volatility. We're live. And so, yeah, like that is kind of what sets the premium for these option contracts, and there's a way to kind of like make them more and less sensitive to the stock price. And anyway, but the point is, however you get it, you get this ball of extrinsic value, which is like, let's say like, 10 grand or whatever. I mean, it has to be enough to like, I don't know. No, you could do it with 1 grand. You could do it with $100. Let's say it's $100. That's the right way to do it. So this is serious. Yeah, you could do this. You could do this with $100. So you do this like options double down. You're like buying this stupid dinky $50 contract, which isn't even going to move. Anyway, but like, let's just say you get it. And you could actually really do this with $100. It's funny. And so like it falls in half and then you buy another one, blah, blah, blah. Now you're in like $300, but you like catch the bottom and it like springs back up. It's like, holy shit, it's like $600. Now, what you could do is you could sell out when you're scared of that or whatever. But I don't think you should do that. You should, if you think you've caught the top, sell a call against it and then use that premium to do something. One would just be to like buy back the call at 20% less or 40% or whatever, probably 50% actually with an option. Or you can like, you can pay yourself, you could do whatever you want. You could take a little off, but like there's, you can earn credits off that risk. And so like when you sell a call, you're taking a risk. What you're risking is all the upside. That's a genuine risk. And I've been on the wrong side of that trade. And so like, that's a real risk is the risk to the upside. So anyway, that's the options double down. We started with that, but we can still talk about order flow. Let's get the mouse back over to here. So what's going on? Order flow. Yeah. People are calling Tesla, not surprising given their earnings. And finally, the puts are coming in on Nvidia, finally, and Apple. And so this feels like justice is being served this week. Yeah, this is good. This is good. Let's see what happened on Friday. So we're putting big tech. We're putting Meta, Tesla, and look who we're calling on Friday alone. Look who we're calling. Who's that? No. Maybe it was the whole week we called them. Yeah. Okay. Hey, look, ARK's on that list. I thought I saw something that maybe I can't find now. But interesting to see KARE and ARK are getting called. Is that the most this week? What are we on? 22. Okay. It should be this week. Yeah. So QQQ is of course getting called, but look at the call volume on QQQ. That's crazy. And the puts are just not there. Now, question is, will this continue next week? So we have like the Fed's meeting, and I guess like the idea would be that they're going to say something new that they haven't said before, even though everything that they've tried to do for the last 6 months has been consistent and, anyway, whatever. There could be a surprise. Yeah, there could be some new information that has to be priced in. But I think we're pretty bullish. So let's look at the sentiment. And that's what the sentiment says. We're bullish. Now, it's definitely not as bullish as last week. And I think that only makes sense as people are going to pull back ahead of the Fed meeting. So like if you were a rational actor, you weren't YOLOing calls into Tesla, which always goes down after earnings, always. Except that one time you're not betting on it, it will. So you always have to bet on it, no matter what. But anyway, what was I saying? Tesla, fucking look at the sentiment. It's bullish. It's not as bullish as last week, but we're still pretty bullish. And you still see. Let's see what you guys are seeing. This. You still see people doing like these crazy out of the money calls, but I don't think they really worked this week because people came in with a ton of short interest on these stocks. So Nvidia, I wonder if Nvidia and Apple have just been like this engine driven by people that were just like kind of like amplifying and like putting all their gains back into Apple and Nvidia. And I think they have to be close to bursting. And I don't know, like, we'll see, right? But if you were to take a short position against them, let's say you thought that the risk had flipped from the upside to the downside, but you thought there was still some upside risk only based off momentum. Maybe what you could do is, what would you do? I guess you would like buy puts, and I don't know, like I still want to like acquire this extrinsic value on the way down. I still feel like there's a way to do it in options. Like there's a way to have an exposure to the equity, meaning deep in the money, while still like you're accepting the same risk as shares, just for less capital and less, if you're using margin, less cost, way less cost. And so no cost. So anyway, like maybe we're going to start seeing the decline of Nvidia and Apple. Nvidia, come on, it's got to get cut maybe more than in half. I don't know even how to value that, but it's crazy. Same thing with Apple. They're both like maybe less so with Apple as this displays. But in my mind, these are all good puts. Oh, puts on Coin, puts on Palantir. Well, that might, Anyway, we'll see what happens. We got calls on Blizzard, on Activision, on Disney calls coming. Nice to see on the list. We saw so many puts for previous weeks on Disney. And so this might be an interesting time to take a look. I saw these CVS puts coming in. I was like, whatever. Same Baba, Uber. Not sorry, guys. We're getting Snap calls. I didn't even see that. Snap should get called up. Let's see what this was. So 58K. Yeah, we got some good premium. So people are basically betting that Snapchat is going to go up to $13 and $14 by August. And they're paying like a couple $100,000, 50 to a couple $100,000 order size. For some are out there, some are like $16, $20, 14, 15. So highest is kind of like 20, 13.5, 12.5. I mean, isn't that in the money? What were the spot prices? Yeah, that's actually in the money. So it was trading around like 12.80 to 13.50 at the time of these orders. Pretty interesting. Wait, you guys can see that. Let's go up. Nice. So yeah, interesting. Cool. Most active, I guess. Tesla. I don't care about any of that. But let's see last week. What did that look like? I don't think that's right. Set to 10th to 14th. Huh. So NVIDIA's been getting put for 2 weeks now, and Tesla has been getting called. But I don't know. The price action does reflect this. Yeah. I think Tesla is going to have a price escape soon. And so I think the risk is to the downside, and it's unfortunate. I wish I had been around, like with my current understanding of how things work. With at the time it was $90, which was actually quite recently, and so it'll be interesting to see if some of these ideas, like the options double down, where you like, so the whole thing with like selling a call against a like a purchased call. First of all, that purchase call and naked call, that's a ton of risk. You should sell calls just in case, right? The question is, what do you do with the premium? You don't pay yourself, you put it back into the system, I think, into whatever sentiment is reflected in the order flow. This is what the smart money is doing. So you take that with your best judgment and any information you think you have to create your own sentiment and your own idea of like your bullish and bearish flow. And you basically represent that through calls and puts, but mostly calls, because you buy calls, you buy naked calls at one end, exposing yourself to extreme risk, but then you offset it, you hedge it, you know, of course you hedge it, with like whatever bearishness you're at. So that could be like long-term bearishness of like, you know, you're not collecting a ton of premium, or it could be like actually there's a ton of IV in the stock and you're like aggressively selling calls. Maybe you're even like acquiring more equity so you can sell calls. And if you get cut in half there, you're like, well, hey, I'm now going to quadruple my equity position. I just got cut in half. Great. Now I'll quadruple it. You can't do that with shares when you get cut in half, even if you sell them short. And then you lose your whole cost average with this method I'm describing, the options double down or whatever. You can actually improve your cost average. Not only you must, it's like part of the system or whatever. You're always actually improving your cost average. Always, always. Or you're not doing it. My way, anyway. So, like, that's the order flow, and it's still bullish for this whole week. Has been bullish. Search. Boom. So you can see it was a little more bullish throughout the week, but that only makes sense. So next week will be interesting. Monday, let's speculate. What's the kind of action going to be next week? I think it's going to be like tepid bull Monday. Tuesday, tepid bull. I don't know, something. I just think it's going to be bullish. I still think, I don't think the bears have a chance. I think there's no new information that has not been priced into the market. And the only thing that could happen is even a rise in inflation. That could do it if there was like a dramatic spike. But yeah, like that would have to be shown in the true numbers or whatever. And so maybe there's always a huge risk to the downside. At any time, the price can double or fall in half. And so if you're going to be like dealing with options like we are here, this is options, right? Options order flow. Like you got to be hedging yourself in some ways. And, you know, maybe it's better. It's so much better to be hedged. And so it's real easy to hedge though through sold calls. And so one thing that justifies kind of having an outsized options position is the fact that you can like earn credits on that. And you can basically get paid to take on the upside risk, which is a real risk. And if you've ever had a sold call where the price, you had like a price gap to the upside, or you just let it fester and the price like slowly increased and you didn't sell it, you'll feel that pain. It's literally takes it removes the equity. I like to think of it as a snapshot. So it's like, what is a snapshot of the time that you purchased it, of whatever the stock price is? It removes that much of the equity from the entire future potential of the stock, lifetime of the contract. And so that's something to think about. But you do get paid a ton to do it. And so, you know, then you can use that premium to either buy more equity or hedge your equity. So thus you can amplify your strategy. But what are we talking about? Order flow, sentiment. Well, this is it. This is the sentiment. So I like to go and look at the out of the money. This is just who I am. Sorry, I'm not like, I just like to do it my way. I want to see what like risky, crazy bets were out there, because I think that's our environment. I think the market has been largely de-risked. And if there was ever a time to speculate, if there was ever a time to like do a little bit of like more riskier aggressiveness, I think it's like in the early stages of a sea change, where you think you like know where the sea is changing or whatever. Now, does that mean that big tech? The hilarious thing would be if big tech didn't correct, right? Like, what if they had like a 10% decline? They were like, oh, that was it, like they should be down 50% or not, or they're just like incredibly undervalued because there could be systemic disinflation through automation and artificial intelligence, which will increasingly basically create more wealth than we know what to do with. But whatever. Anyway, anything could happen. I don't know. Like, the thing to remember is none of it really matters, because if aliens invade, the price is going to, I don't know what is going to happen to the price actually, but like crazy shit. And so like, yeah, that's the order flow. Is like it's pretty bullish, and people were going into this week kind of like more bullish, and they softened up and prep for Fed, I think. And next week, I think it's still going to be bullish, and I think that's going to burn the last of the bears, which I am one of them, because I sell calls, and so I would say my risk is a little bit more to the upside right now, but not really, because you could just always buy back the calls, so it's not that crazy. But yeah, like if you ever, there's a lot of things that I would like to get feedback on, but one idea I do like about selling calls is they give you this really good gap down protection. So like when you get gap down on a options position, that hurts. Like that hurts big time. That's why you need to have sold calls, because they give you that same options, leverage, and you can match it like 1-to-1, especially for events like earnings. But I'll tell you, so like let's talk about a couple names real quick, and then we can wrap up and go on with our days. Thanks for like hanging out while I'm still figuring out how to keep this live. So yeah, I talked a little bit about earnings. Netflix went down. If you had like a call on Netflix, you saw the price obviously collapse, which is, if you didn't, so like I had a bunch of calls on Zions, uncapped, unhedged. It was a bonanza. And so you win some, you lose some. At the end, does it really matter? Because if it's up, you're going to wish you had bought more unhedged. If it's down, you're going to wish you had hedged. Just always hedge enough or whatever. Oh, yeah, always hedge enough. So anyway, yeah, there's this refactor of the QQQ where they're rebalancing the index, and they're basically changing around the positions of the big tech companies. And I think that's causing a bunch of crazy dislocations. But then you also, I think, have general selling of maybe big tech has been like seen as a safety trade. Meaning like if you don't know what else to buy, but you want to be in the market, you're going to go where the momentum is, and you're going to go with what's working. And that has forever been the QQQs and big tech. But now that seems to like possibly be reversing. I don't really know if it is reversing. I don't really know if it is reversing. I think it could just be like this, the surprise, the shock. What would be hilarious is if there was like the true value of these tech companies was like closer to double or triple what the market was valuing them for. I don't know. I don't know how to evaluate such things. So yeah, that's all my ideas. That's what people are doing. I mean, we could look at a couple of these calls. So like this is basically institutions and whales are betting every day with their dollars. Let's look at Friday's action because that'll be pretty indicative of the most recent information that has been priced into the market. And so we'll say only show me, well, let's do stocks. So what are people calling? Apple, Tesla, UNP. That's kind of cool. Let's go look at UNP. UNP is United Pacific Railways or whatever. So that's just one. Okay. Wasn't worth it. Oh, shit. All right. We got to set up our filter again. So we'll say we want to see stocks that are out of the money, calls, sweeps. So this isn't representative of what people are doing. This is representative of what the most aggressive trades in the market are. That they even exist is kind of the point of why I'm showing you all this. It's pretty crazy. I don't know if it's a phenomena. I haven't been watching this too long, so I can't tell what the trend is. But hey, we got Zion calls. Yes, that's what I'm talking about, Zion. So you have these regionals. I think it might be a good time to buy KRE, but not really. Like I think a bunch of those banks are zombies. I think a bunch of those are zombie banks. So I kind of don't want to buy the KRE, but I kind of do want to buy it. Anyway, yeah, all the usual suspects. Amazon, Google, Disney is getting called. Hell yeah. We got Meta, Airbnb, AMD, Square. Yeah, Microsoft, PayPal. All the usuals are getting called. Anything standing out? We got Tesla. We got Snap. We got Palantir. Let's look at the action on a couple names. So let's look at Coin, which should be, let's go historical. Oh yeah, bearish. We're bearish on Coin, a little bit rightfully so, but not, I think that short-term action. Yeah, right. Like even 1 day back, we're bullish. I don't think it'll be interesting to see if it can hold 100. That would be crazy. I have no idea what's going to happen or how to evaluate the price. But these guys say it's bearish. The options flow says it's bearish. So, interesting. But let's look at Hood. Our friends in the Hood, bullish, of course. Look at this put. They're just hedging their calls. That's all that is. ARK is bearish. I don't know. They touched 47, maybe 46. So I have no idea what the price. I think our recent low was like 36. I think we might be at a local minima, but the people love to short this stock, so it's hard to know. Maybe there's an easy way of knowing what the short interest is. I don't know it, but that'd be nice to know. What is the short interest as far as like the call volume or the call sentiment? We can see from the whales, the institutions, they are bearish. I think they have been actually multiple days. Let's see. Yeah, look at that, even more bearish. But who knows? Maybe it was like a coordinated attack to try to push the price down for whatever reason they had. Who can fucking say? I don't know. Some other names. Let's look at some other names. So Zion getting called. Yep. Let's do the whole week. Okay, let's circle back and do them all with the whole week. So this is the whole week. Coin. Bullish for the week. Hood. Bullish for the week. Arc. Bearish for the week. Tesla, super bullish. Not even super bullish for the week. Palantir. Pretty freaking bullish. But I think they got put hard on Friday, if I remember. Nope, never mind. Disney will be interesting. I think we had a reversal. Bearish for the week. Bearish for the week. Now let's go to Thursday. Bullish. Friday. Even more bullish. Disney's getting called hard. Might be time for Disney. I don't know. This is just what people are buying, right? Who fucking knows? They could be wrong completely. Nvidia, I think, might have a reversal. Yeah, so this is clearly more bullish throughout the week. Now let's look through Wednesday. Look at that. Ooh, that's as bullish as she gets, or they get, or whatever, right? That's a lot of juice in there in that direction. And so, like, let's go to Thursday, but it's back. Yeah, a little less on Thursday. Now let's roll up to Wednesday to Thursday. Okay, significant weakening on Wednesday. So here's how it looks to me. We start the week out on Nvidia amped up, maxed out. And then by Tuesday, Wednesday, people are like, well, there's the Fed meeting. What are people going to sell? They're like, they're definitely going to sell Nvidia. And so we start losing a little bit of juice, but we still got the train going. And now we include Friday from Wednesday. It's still pretty bullish. Damn. Okay, but let's look at Thursday. Okay, that's the transition actually I was looking for. Was Thursday to Friday, we did have a transition in bullishness on Nvidia. And so maybe they're looking at it and they're like, okay, well, what are people going to sell? Obviously, the thing that just like n-tupled, right? Septupled. But it is interesting. It'll be interesting to see next week if it swings to bearish, because it's been bullish so long. And it'll be cool to see how people express. So what are they expressing with these puts? They're at the spot price, so they're saying like $10 below the money. And what are they buying? Everything's so recent. Damn it, lost it. Well, anyway, that's what's going on with all those guys. That's the puts and the calls. And of all there's a lot of like earnings actions happening, and people like talk about it, so you can look at those other channels. Here, we just look at the order flow. In the future, I would like this to be a live chat, and we can look at other names. But like, this is what I'm paying attention to right now. We can also look, now that I'm thinking of it, before we conclude, with the, not dark pools. It's interesting that it even exists. Is kind of the point of that. Let's look at ETFs. What ETFs are people buying? So bearish on ETFs for the week is kind of weird. But that could have something to do with this refactor. Let's go back to this and go to ETFs. So what ETFs were people buying? QQQ had crazy calls. Look at that. That's nuts. What was it like the week before? 230. Even more on SPY. What the fuck is that? QQQ is getting put. Oh my God, they're playing games with us. Yes, they're playing games. So they're putting one and calling the other on opposite weeks. Is that really what's happening? No, that can't be it. It's all like really rational actors and people that are not YOLOing millions of premium into expiring contracts. It's really smart finance guys that don't do cocaine or Adderall or any stimulants at all. They just, read books and play with their numbers. What? Okay, so anyway, the IWM, that was a couple of weeks ago. Let's see how IWM. People focus on it because I think, you want to know why I'm focused on it, is because I think it's a good market indicator. I think so. Bearish for the week. Let's go back to historical. IWM. See, we're bullish still. That's a tepid bull. I'd say next week we might see this guy here, like this green line in a bar chart, just sag back a little bit of percents. But I don't know. Maybe we'll go full bear. We'll see, right? We shall see. So you can go full bear in a stock. I wonder if you can go full bear in an options contract. I think you could, by buying an oversupply and relentless selling. I don't know. So something, or maybe from the other side, the market makers, something. IWM is bearish for the week, but not really. Look, it's 50-50. And I think the price action was bullish. So we could look at that. IWM chart. So what is this? Day, week. Yes, it's up 1%, 1.5%. So yeah, pretty good volume. People are selling. Anyway, I don't know. People, I don't know. I can't provide too much in the way of technical analysis of any of this. But what we can do together is speculate on the sentiment and why that sentiment is the way it is, according to this order flow, which represents 2.5 million in premium. It's a lot of money. It's like $6.1 million of premium. And that's a good amount of money to like use as an indicator. But let's look at the QQQs. That's like 50 million bucks. I mean, that's pretty good, right? 40. Anyway, it's a lot of money going into these ETFs and companies. So I'm losing steam. But this is the live stream. I hope you guys have enjoyed it. Let's keep hanging out. Let's keep looking at these names. Next week, I speculate that the bull run continues. Who knows? Correction is healthy. Corrections are good. Let's get all the information baked and priced in, and that will give us the right time to buy. Assuming that you are interested in my double down technique, feel free to reach out, and I might, maybe even reply. So, but please do all the things of liking and subscribing and sharing and sending me just, cookies and stuff, or good things only. Don't send me like anything that would be weird or bad. Just send me stuff I'd appreciate or that would help me. And so that'd be cool. And if you could do more stuff like that, great. But see ya. I don't think I hit it for long enough. I'm still here. You guys want to hang out more? I mean, I'll just go. All right. This is enough.